Good evening, dear colleagues. This is Dan Strelkov with the ForexTimes project on a Sunday, and as always, we'll examine the likely movement of trading instruments for the upcoming trading week. I invite you to join the VIP community of ForexTimes forecasts based on commodity futures trading commission data and Chicago Mercantile Exchange data for 9 trading instruments. This is more than 15 trading instruments, trading signals, and consultations daily at any convenient time. I invite you to the ForexTimes community. Let's get started and begin with the euro dollar, continue with gold, and finish with the Australian dollar against the American dollar. Dear colleagues, we see an 82% increase in buyers according to the Commodity Futures Trading Commission data. However, please note that sellers have been on parity for several weeks, and that means half of the professionals in the Chicago Mercantile Exchange are buying while the other half are selling. Since they can't decide, it's hard for us to make a call, but we should try from a global perspective. There's a high possibility of forming a triangle. As you know, not only is a triangle trend continuation, but it also is the penultimate wave in Ralph Elliott's wave theory. Therefore, we just need a small rise in wave D and a likely fall in wave E to see a rise. So let's go back to the data of Chicago Mercantile Exchange, particularly the weekly option contracts. Let's look at the accumulation of call option contracts that professionals hedge their futures trades with for almost $650 million and the accumulation of put option contracts for almost $500 million. The price, as you see, is exactly in the middle between them. What does this mean, dear colleagues? If on Monday, Tuesday, and Wednesday we see a rise in the trading instrument in the first half of Wednesday, we will be considering only sales if the instrument rises into the upper range or resistance range. But if we see a downward trend in the lower range or the support range, we will be considering purchases. Please only consider this approach and no other. Thank you. Regarding gold, unfortunately, neither the buyers nor sellers can be pleased. The simple reason being the formation of a particular diagonal triangle. Indeed, I'm pretty sure everyone noticed this diagonal triangle, and I believe everyone wondered what kind of diagonal triangle it is. Is it an initial triangle and after it we will see a correction and continued growth? Or is it a terminal triangle after which we will see a strong downward movement? Let me clarify where I get all this from. If we assume the formation of an initial diagonal triangle, I would guess there was a zigzag in wave A followed by a zigzag in wave B. The end of a corrective movement in wave C forms a terminal diagonal triangle ending this whole corrective structure. From this diagonal triangle, we then begin an impulsive growth, correction, and continue to grow. However, if wave A ended here, that means we are already forming an initial diagonal triangle in wave A of a higher order, followed by AB, and in wave C of wave B of a higher order, we have a terminal diagonal triangle and we turn downwards. This creates a double situation of uncertainty. How to handle it and what to do next is ambiguous. Firstly, as we form the pin bar on the H4 time frame and NBAs on H1 and 30 time frames, I presume that in the coming days we will see a downward movement. Therefore, for those who scalp, it makes sense to push downwards. For those who try to trade strategically, whether we are buyers or sellers, it is this downward movement in which we are interested. If this turns out to be an obvious impulse with corrections, naturally, we enter the market to sell with deferred orders as stop. However, if we observe a more apparent correctional decline, say in this manner, we understand it must be a correction, likely a correction to the initial diagonal triangle, which will potentially develop upwards. Nevertheless, we cannot do without this consideration. Let's not forget the emergence of the initial diagonal triangle that may develop in a zigzag form, 1, 2, 3, 4, 5, followed by a correction, and then we plummet. Dear colleagues, here are three possibilities, and at this moment, there is nothing I can suggest except for trying to work off a downward movement based on NBA's formation. Then, in the middle of the week, closer to the end of the trading week, we will see what we will have formed here and how we can work with this. Of course, you may ask me about this in the community, ask questions, and I will always answer, and I will try to answer at any time of the day. Regarding the Australian dollar, once again, there is an expectation for the formation of a downward-oriented triangle, an ABCDE triangle to be exact, with wave E being the terminal triangle point. Likely we will see a downward movement start after that point. This is assumption number one. The second assumption is based on data obtained from the Commodity Futures Trading Commission, CFTC, signaling an increase in sellers. That is to say, we have an upward trend with an increase in sellers, which is 7% more and counting. This data accounted for professional actions taken from last Wednesday morning to Tuesday evening. As seen on Wednesday, Thursday, and Friday, the price continues to rise. Now, here lies the question. If we have an increase in sellers, why does the price continue to rise? This is called divergence. Divergence between the actions of the best in Chicago and the price indications. As such, selling this particular trading instrument is looking promising, especially when the price is already in the most potent range. This is the ex-gera of the options, which hedge their future sales, and this level is commonly referred to as the level of maximum open interest for call option contracts. The price is already closely approaching the level of loss for the market maker. The price range for market makers is considered their zone of profit. Anything beyond that towards expiry of the option contracts, the market maker will be making losses. Market makers do not like losses, hence they would prefer the price to not even come close to their critical levels of the range. So let's discuss the situation with the dollar currently and the two likely development scenarios to consider. At the moment, there are no forward impulse formations for entering the market. We simply have a zigzag. First, we either anticipate the formation of a terminal diagonal triangle in wave C of an ABC terminal diagonal triangle, form the triangle, then impulse correct, then decide on market entry for sale. Of course, I will provide a trading signal for this in the trading signal channel, so I invite you to join the community to avoid missing these trading signals. Alternatively, we will see an ABC formation where a diagonal triangle is forming as an initial diagonal triangle. The start of this formation is a zigzag, wave 1, 2, 3, 4, 5. If we see the formation of this initial diagonal triangle, then after correction, we will decide on entering the market for sale. These are the two possible plans, and I must admit to liking this plan a lot. Thank you so much for listening, and I hope it was clear to you. Once again, I invite you to join the community to avoid missing out on excellent market entries and trading signals, also forecasts for many other trading instruments. Feel free to ask questions, receive daily consultations from me, and come to the ForexTimes community. That's it for today, everyone. Goodbye for now.